Lesson 11.2, recording sales transactions using a general journal. We're going to account for sales returns and allowances, post a general journal to the accounts receivable ledger and the general ledger, and record a correcting entry to the accounts receivable ledger. Credit memorandum for sales returns and allowances. Credit allowed to a customer for the sales price of returned merchandise, resulting in a decrease in the accounts receivable of the merchandising business, is called a sales return. Credit allowed to a customer for part of the sales price of merchandise that is not returned, resulting in a decrease in the accounts receivable of the merchandising business, is called the sales allowance. A form prepared by the vendor showing the amount deducted for returns and allowance is called a credit memorandum. This shows a credit memorandum where the customer is receiving credit for something they've returned. Journalizing sales returns and allowances. December 16th, granted credit to Lake Automotive for merchandise returned, $65.85 plus sales tax $3.95 from S500, total $69.80. Credit memorandum number 14. Sales returns and allowance increases with a debit, sales tax payable decreases with a debit, and accounts receivable decreases with a credit. This transaction is 3 lines long. First, put the date. Our first debit account is sales returns and allowances for $65.85. We put CM for credit memorandum 14. We put the amount of $65.85. We then put our second debit account title, sales tax payable. The sales tax amount is $3.95. Then put the credit account titles, which are accounts receivable / Lake Automotive. Then a diagonal line goes in the post reference column, and then the total amount of the return is the $65.85 plus the sales tax, which comes to $69.80. Posting from a general journal to an accounts receivable ledger. We're posting to Lake Automotive. The date is the 16th. This is general journal, page 12, so it's G12. It is a credit of $69.80. We have a debit balance and a credit. That means we would subtract. Our new balance is $536.52. And then we take our customer number and put it on the right side of the diagonal line in the post-reference column. Correcting errors in subsidiary ledger accounts. On December 26th, we found that a sale on account to Skinner College was incorrectly charged to the account of Wells Apartments, 334, memorandum number 44. First thing is we write the date, write the name of the correct customer in the debit, write the memorandum number, M44, write the amount in the debit column, 334, indent and write the name of the incorrectly charged customer in the credit, write the amount in the credit column, 334, then you would write the date in the date column of each of the customer accounts, Skinner College and Wells Apartments. Write the general journal page number in the post-reference column of each customer account, which is G12. Write the amount of the appropriate debit or credit. So for Skinner College, it's a debit. For Wells Apartments, it's a credit. For Skinner College, we have a debit balance and a debit, so we're going to add. For Wells Apartments, we have a debit balance and a credit. We're going to subtract because that was the wrong account. Calculate and write the new account balance, and then write the customer numbers in the post-reference column of the general journal. What is the difference between a sales return and a sales allowance? A sales return is credit allowed to a customer for the sales price of returned merchandise. A sales allowance is credit allowed to a customer for part of the sales price of merchandise that is not returned, such as for a shortage in a shipment. What is the source document for journalizing sales returns and allowances? It's a credit memorandum. Why are sales returns and allowances not debited to the sales account? To provide better information, enabling management to quickly learn if the percent of sales returns and allowances to sales is greater than expected. Which general ledger accounts are affected and how by a sales return and allowances transaction? Sales returns and allowances and sales tax payable are debited. Accounts receivable is credited.